either the sales weren't made or they got reported late because of the holidays or something along those lines. Thanks for joining me on the Comstock channel. I'm analyst Brian Grady, and I want to look at the export pace specifically for corn, soybeans, and wheat and where we stand. USDA continues to update that data as we get caught up on the weekly export sales numbers. Now, USDA won't be up to date on those until we get to the first week in January. And so this is still catch-up mode, but it gives us a picture of where the export demand was as we move through the government shutdown period, as that old data is released here in a catch-up mode, so to speak. And what we've seen is that Mexico was the big buyer of grain and soy during that period, during the latest reporting period. As of the week ended October 23rd, Mexico was the lead buyer of corn, soybeans, and wheat, along with the pork. And so Mexico really used the opportunity to buy not only grains, but also pork during the government shutdown. And so probably not too much of a surprise, but just Mexico was the primary buyer. From a total volume perspective, corn export commitments, so that's everything that's actually been exported to this point, and then all the outstanding sales that are also on the books in addition to that. And so as of October 23rd, as you can see here, the corn export commitments were well above what the 5-year average is. And in fact, that's on a record pace, and it needs to be, because USDA forecasts record exports of 3.075 billion bushels for the entire 25-26 marketing year. And so corn is living up to its record export potential at this point in time. That, it's been the stalwart, so to speak, early on in the new crop marketing year here, as shipments go out the door and continue to be racked up on a weekly basis in big numbers. Wheat export commitments are also running stronger than the 5-year average, and just a strong start to the 2025-26 marketing year. Now, the number for 24-25 was on the lower end of things, and so while there is a bigger export figure plugged in for the 25-26 marketing year, wheat remains on pace to hit that, but historically still well below some of the bigger years that we've seen on an export side of things. And then finally, soybean export commitments, not a surprise here because of lack of Chinese buying, and this is as of October 23rd. And so as of this point, China hadn't booked any U.S. soybeans yet for the 25-26 marketing year. Now, some of those have come in via daily sales, and I'll show you that later. But nothing on a weekly basis here as of the 23rd, and as a result, soybean export commitments are running well below what the average pace is. In fact, this is the lowest that we've seen in the 5-year period, and so just a really slow start to the 2025-26 marketing year. Despite exports going out to other countries, aside from China, they just aren't able to make up the difference to this point in time. On the heat gauge, as I'll call it, where we stand versus what the percent of normal is for export commitments as of October 23rd, corn was nearly 50% of that level already. And so while the export forecast is a record at 3.075 billion bushels, as I previously mentioned, we need to remain on a strong pace. And so we are on pace at the moment to hit that level. And that's something that we need to watch going forward, because whenever you have a record export number plugged into the balance sheet, it draws questions about, can we get there? And the answer as of right now at the end of October with that data is yes, we can get there if we remain on pace, but we need to remain on pace through the remainder of the marketing year. On the wheat side of things, the export forecast is 900 million bushels. We are at 2/3 of that level already. And historically, you would be about just a little bit less than that, just a little bit less than 2/3 of the full year marketing year forecast by the end of October. And then soybeans, unfortunately, and I mentioned this earlier, and it's probably not too much of a surprise after looking at that commitments chart, but we stand at only 35%, just over a third of total commitments at this point in time. And that's despite a big downturn in terms of the export forecast from what 24-25 was. So not only do we have a smaller export forecast, but we're running below the historical pace to hit that level. So soybeans really need to get going. I mentioned China will make some difference as some of the sales that they've recently purchased here start to come onto the official data. As of we sit here on December 1st, we have confirmed 2.251 million metric tons of soybean sales to China via daily export sales announcements from USDA. It's far short of the 12 million tons that U.S. officials say China will purchase by the end of the year. And so those soybean purchases from China really need to get going. Now, if you remember back to last week, early last week, the talk was that China booked roughly 12 to 15, 18 cargoes of U.S. soybeans. That would be 600,000 metric tons to 975,000 metric tons, depending on the actual number of cargoes and the cargo size. So cargo size sometimes varies. USDA only confirmed 312,000 metric tons of those as of December 1st, and those confirmations came last Friday during the partial market day. So either the sales weren't made or they got reported late because of the holidays or something along those lines. So that's something that we need to watch moving forward is over the next couple of days is do any of those sales actually get confirmed, or was the rumored purchases last week by China actually lighter than anticipated? Now, one of the things that we are watching is that when China actually signs the trade agreement that was reached at the end of October, that hasn't been officially signed yet, meaning that there are some minor details, maybe more than minor details, some details anyway, that haven't yet been ironed out and allowing them to sign that agreement. So once that agreement is signed, there is likely to be more purchases, more active purchases by Chinese firms. And I've gone over this previously, but because U.S. prices are higher than what Brazilian prices are currently, any of the purchases from Chinese firms in that scenario would come from state-owned firms. And so COFCO, Sinograin, those types of state-owned firms. And it doesn't really matter who the purchasing buyer is. It's just a matter of how they are used, as I mentioned previously, once they get to China. Anything that's purchased by a state-owned firm is likely to go into state reserves. If it's purchased by a commercial firm, then they are likely to be used more immediately for soy crushing and moved into the animal feed sector. Anyway, that's kind of an update on where we stand from an export perspective as of October 23rd. It's something that we need to monitor. On the corn side of things, because record exports are projected for the 2025-26 marketing year, and on soybeans because they are playing catch-up. The one that kind of gets lost in the shuffle is wheat, and wheat is off to a good, strong start to the 2025-26 marketing year from an export perspective, but it needs to maintain that pace to get to that 900 million bushel forecast that USDA currently has built into the balance sheet. For the Comstock channel, I'm analyst Brian Grady.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.